Welcome back into the podcast today. I've got Bill Barhydt coming in from Abra today, and we're going to be breaking down the clarity position and what's happening in DC, which is a lot. Literally, as we're recording this, DC is underway for a potential markup. So, Bill, welcome to the show.
Great to be here. Thanks for having me.
So, Bill, you have had a chance to, to give our viewers and listeners a little bit of history here around Abra. You shifted and pivoted a little bit of where you guys were in the crypto industry to where you are now. Kind of explain that first.
Yeah, so under the last two different kind of government regimes, we had a lot of differing opinions as to how to operate in the digital asset space. That's just the reality of what we had. And our goal all along has been to build what amounts to effectively a crypto banking platform that basically prepares people for the current state and the future state of the digital asset world, being able
Yeah.
to buy first gen crypto assets, Bitcoin, Ethereum, XRP, it's, whatever, stable coins, earn yield on them, borrow against Bitcoin, things like that. And we have this mantra, trader and borrow, right? I mean, that's what people would want to do in the digital asset realm. And we've had to modify how we bring those services to market to kind of fit the mold of what is available
Mhm.
within the existing regulatory frameworks. And we, through a lot of, wouldn't say trial and error, but a lot of like legal work and digging in, we realized that the easiest and most straightforward way, not the easiest, that's crazy actually, but the most realistic way of offering those services is through the model that we operate under today at Abra.
All right. So the model that you're working on today is a bit different. You've got lending products in there. You're mostly going after high net worth individuals, institutions. Do you see the pivot that is happening right now in DC to finally position the rest of the market? We've seen kind of the early adopters moving into the space. Do you think this is the trigger for traditional investors, maybe of all types, starting to move into the market?
Well, it's happening already.
Yeah.
So, a few things have happened in the last year and that really matter. I would say actually 2 years that really matter, even before the Trump administration came in,
Mhm.
but post Trump administration, it's really accelerated. And, we've seen the BlackRock ETFs were a huge catalyst because it sent a message to Wall Street that if you're not focusing on, digital assets, you're missing the boat. And it's become their fastest growing products ever. And that's pretty much true for everyone who's released a Bitcoin ETF. So that's part one. I would
Right.
say part two is we went from the last administration saying everything is a security
Mhm.
to recent guidance of interpretation of existing law, even pre-Clarity Act, which I'm sure we'll get into, that
Yeah.
says no, not everything is a security. And here is guidance on how to think about that. And here's guidance on what to do if something is a security. And
Yeah.
and that's what we had been asking for in principle all along. Now, we kind of surmised that this was where the world had to go, meaning the US securities and commodities rules kind of had to go in this direction if any sane, layer of oversight was applied. And so we were preparing for that. And so to your point about, pivoting how we operate, right? We formed a wealth advisory, right? We integrated with third-party custody service
Mhm.
providers, integrate with certain, third-party qualified custody prime brokers, and we basically built an end-to-end stack to facilitate services for clients, again, under that mantra of trade earn borrow. I want to own digital assets. I
Right.
want to earn yield on digital assets, and I want to borrow against the value of digital assets. Same concept from a client mentality perspective, maybe foregoing kind of small dollar deposits under this model, but still getting to the promised land.
Yeah. Well, and I think this is something we're seeing more active, obviously, in the crypto space, especially from our audits. We've seen this already. Right now, in terms of the lend borrow tools that you guys have available, what assets can I borrow against today?
Yeah, today it's Bitcoin, Ethereum, and Solana that I can borrow against. and we'll be adding more to that over time. My prediction is in 2 years, we'll be doing more loans against tokenized stocks than we will against
Yeah.
Bitcoin.
Yeah.
And that
I
makes a
would
lot of sense.
What
Yeah.
did you make of, Anthropic's move? Did you follow this just yesterday where they
You mean when they're trying to block these secondary sales
yeah,
and
secondary
yeah,
sales, yeah.
this is an ongoing issue, right? It has to do with, you know, aligning interests of companies that put vesting schedules in place and, have basically transfer rights issues and,
Right.
are trying to avoid reaching a certain there's different rules that apply when you reach different shareholder numbers, and so all of that creates downstream issues for companies. So
Yeah.
so I do get, and OpenAI went through the same thing. I think like maybe 18 months ago I read,
Yeah.
where they were basically trying to block companies from creating secondary markets in their shares or tokenizing their shares, which is gives you the net effect of having a secondary market. So it's a complex issue. It can be addressed head on, and but you have to basically want to deal with the issue. If you don't want to deal with the issue because you're a private company and you don't want any disclosures, you want to keep the number of shareholders under a certain threshold, then you're just going to basically say, you know what, we don't support any of this, everybody
Mhm.
go away. and
Yeah.
and that seems to be the position that they've taken so far.
Do you think this is gonna be a company by company assessment?
Right now it is, unless
Yeah.
the standards change, right? So for example, now we have a very simple standard for doing financing that's not yet equity, right? Safe agreement, right? It's a simple agreement for for future equity, or a SAFT for future tokens, and we may end up with something like that for the ability to have transfer rights within private companies. But the
Mhm.
tokenization of everything is actually going to change everything from a trading and custody perspective
Right.
in the coming months, and so I think this is a short-term problem, meaning that it's going to be very, very difficult for companies to prevent people who have full ownership of their shares from transferring those shares,
Yeah.
unless there's some very, very explicit agreement that they make early on with shareholders in a private company structure,
Mhm.
that private placements just aren't allowed, and for some via some legal mechanism can block them. Um, but that doesn't happen, which I think is going to become the norm. In other words, I think the norm is going to be, we're going to have private markets and we're going to have public markets, and everything's going to be tokenized and everything's
Yep.
going to be fungible and everything's going to be tradable 24/7 unless you make exceptions.
Mhm. Yeah. Well, and I think the advantage to that is kinda like, what we're seeing in the market right now. Here's JP Morgan filing
Yep.
for a tokenized money market. So, this is a big deal. Eric was talking about this because JP Morgan's inching further into crypto,
Yep.
pretty low fees in
Yep.
general, pretty stable NAV. What do you make of this with JPM coming in, to the money market fund? This is an interesting play. What are your thoughts?
Yeah. I mean, we've predicted this is going to happen. We've launched a tokenized yield bearing stablecoin as well. It's different from this product. This is more of a traditional
Right.
money market fund, right? Which tends to, is a bank product, whereas what we're doing is a security product, and so you get kind of to the same place. Ours is a much higher yield, but look, every bank is going to want to do this,
Mhm.
because when you tokenize a product, you do effectively two things that matter, and the first is you're representing a work product as a fungible token. Okay. Why is that interesting? Well, that's interesting because it's tradable anywhere. All right.
Exactly.
And so, but more importantly than that, you enable infinite distribution, right? So if you have a money market product today as a bank, there's only one place to buy that money market, and that's the
Mhm.
bank that issued it. If you tokenize it, you can issue it, you can release it everywhere
Right.
within the guidelines or the framework of what the banks and the SEC allow, plus what would be allowed under the Clarity Act. And so, but basically you have significantly broader distribution for your money market product than you do if you're just offering it via your small bank. Now, obviously, JP Morgan, Morgan Stanley's, just launched an ETF. These are not small banks.
Yeah.
But every mid-sized bank in the country can now offer a tokenized money market product, create some tweak differentiator that might say my money market product is a little bit different than theirs, tokenize it, release it, and now Coinbase might have a page, or Abra might have a page in our wealth management stack that says here's 75 different money market products, and our AI portfolio allocation tool will decide based upon certain parameters which product you should store your cash in. Do you want to use the Abra USDAF for high yield, and here are
Right.
the risk disclosures for that, or do you want a treasury money market product, and the difference might be daily liquidity for 50 basis points less versus monthly liquidity for 50 basis points more? Who knows?
When you look at the speed in which we're already seeing this happen, you just stated a few minutes ago that this would be just months around the corner here in terms of tokenized securities lining up. Obviously, with clarity in tow, this could really remake how the U.S. financial markets work. What are you thinking for 2026 will be the big takeaway? And let's assume that clarity gets through, but the big takeaway for later this year, anything that you're watching specifically?
Yeah, I think there's well, actually three things that I'm thinking about. This 26 so far has been a continuation of 25. 25 was the year of the stable coin circle coming out, et cetera, et cetera. And we're seeing, just a huge number of bank-based stable coins being released as a result of Genius Act, and it serves its purpose, and the competition is very healthy. The second thing is now I would call it an essential tension that's
Mhm.
evolved in the last 90 days, and especially between the bank lobby and the crypto lobby. And that is, some of it centered around this idea of who can pay yield on deposits or cash
Okay.
deposit equivalents, which in this
Yep.
case would be stablecoins. And that's a great fight because it clarifies a lot of things, part of the pun, right? So that's the purpose of this act, right? Is to clarify, get everybody on the same bus pointing in the same direction and say, okay, here are the rules of the road, which is what we've actually been asking for a long time. So I have a very strong feeling about this, and it's probably a little contrarian to my peers in the space. Most crypto exchanges want to act like a bank, but they don't want to be a bank, right? And
Right.
they think, well, that's the advantage of tokenization is I can act like a bank. And I have, if you're holding someone else's money and you're lending against those deposits, right? You're a bank.
Mhm.
And so having different rules for, Coinbase acting as a bank and a bank acting as a bank doesn't actually make sense to me. Okay. Unless, of course, there's no fractional reserve lending in the system. And then maybe you can use money transmitter licenses and lending licenses and things like that. But this gets very complicated for the audience, and I'm going to make it simple. Okay. If you're Chase, the oversight that you have because your deposits are insured by the taxpayer is enormous, right?
Yep.
I've never seen the team, but I'm going to go out on a limb and say there is a team of OCC, FDIC, FinCEN staff on site at Chase overseeing the bank. Okay. Because they don't want to be left holding the proverbial bag if they start doing, fraud and all these other things, and, unrealistic lending practices, risk-free lending practices, et cetera, et cetera. Coinbase doesn't operate that way. Coinbase operates effectively as a large money transmitter, right? Which is overseen by myriad state licenses or some kind of, OCC trust charter. Okay. But it's a very different regime than operating, under a fractional reserve banking system. And so to tell Coinbase that, you can't basically just offer blindly the same services as the bank actually makes a lot of sense to me, right?
Yeah.
Unless you basically say, hey, I want to be a bank, and that's fine. And now you may operate differently because your assets might be tokenized, but you're still a bank. Okay. So I feel like having this fight was actually very productive. And I've gotten a little bit of a look behind the scenes at who's doing a lot of the drafting and some
Yeah.
staffers, and these people are super smart. Like this is not just willy nilly. Like, hey, what do you want? What do you want? Like these
Mhm.
people really understand the nuances involved because you've got banking regulation, you've got securities regulation, you've got commodities and derivatives regulation, and they all have to reconcile because in the US, we create clear delineations between those
Yep.
concepts. And this also, I'll stop rambling in a second, but this also mandates a lot of cooperation between the agencies. If you look at the different sections, you just take a look at the summary sections, and it does actually mandate cooperation. That's always been a hard thing, right? Between the Fed and the OCC and the FDIC and the SEC and the CFTC, who does what? Who gets to stop somebody from doing something? And so I like in very many ways the direction this is going.
Do you think that with the likelihood that maybe the banks, I guess you could consider based on what we've seen so far, that they didn't get everything they wanted, do you think they would reposition their lobby efforts toward the OCC in terms of the policy descriptions
Yeah,
that would come out?
I, I think the last ditch effort is Elizabeth Warren herself,
Okay,
who who is just hell bent on killing any innovation in
sure.
the banking space that's not
Yep.
self-serving. And,
Mhm.
look, her stated goal is to socialize the banking system. If you tokenize assets and create an infinite number of stable coins, that is the opposite of socializing the
Yep.
banking system. What China has done is socializing the banking system. Everybody gets a social credit score. You stay in line. If you don't, your social score goes down, which affects your ability to transact and
Sure.
conduct commerce in a free society. And so that is that's evil to me. Like, I'm not even going to sugarcoat it. It's not a difference of
Yeah.
opinion. Well, it is a difference of opinion, and one side is evil and one side is not. And I've never experienced that in my life because I'm a technologist at the end of the day who happens to understand money. And so the idea that it's an existential fight of good versus evil is not something I've ever had to deal with before.
Yeah.
And yeah, okay, she may be misguided, as opposed to like genuinely evil. I don't know her personally, but this has to be stopped, right? This march towards the best way to stop the methodical march towards a socialized banking system is a decentralized system with no off switch, and that's
Exactly.
what we
Yeah.
represent.
Well, and I think this is the thing that really starts to boil down into what's happening right now in DC, just to get everybody on board with this. You are talking about some pretty significant changes right now. Currently, the banking committee members have filed over 100 amendments.
Yep.
And this is ahead of, this week's markup vote, which is tomorrow.
Yep.
Can you imagine the amount of amendments? Now, I've talked to many lobbyists in DC. I've talked to several of the senators. And they all tell me one thing, and that is many of these things are pawns in a chess game that they're playing behind the scenes.
Mm.
Is there any area right now that you're concerned that you think is at risk, whether it's DeFi, privacy protections, possibly even an attack again on the yield side? Where do you see the weaknesses?
So it's a good question. I think that if you're a operating as an exchange, you're probably going to want federal licensing as a
Yeah.
result of the Clarity Act. It probably weakens the position of states around leveraging money transmission rules
Mhm.
and makes it more likely that companies would want to operate under federal regime. Now, that having been said, there's a bunch of things in here that create safe harbors, and some of Hester Pierce's ideas around that safe harbor are baked in here, which I find super interesting.
Mhm.
And also, I think even independent of that, the SEC and CFTC were already moving in that direction, partially based upon their ability to interpret existing law, but partially, I think, based upon their guesswork as to where this was going. So I think I can see some states being not too happy about this individually, especially the ones that might be, let's say, a little more heavy-handed. But there's very little, in my opinion, they can do about that. I think this bill is very good for consumers. I think it's going to encourage a lot of the offshoring of crypto back onshore. Right.
Right.
So I know you're asking about things I would be concerned about. The b- and I'm going to flip it a little bit and say the biggest thing I would be concerned about is crypto continuing to move offshore,
Yeah.
as it relates to providing services to Americans. I mean, if I'm in Dubai, I don't mind buying a service provider who's based in Dubai. But as
Sure.
an American, why am I using FTX based in the Bahamas? Well,
Yeah.
because they couldn't figure out how to operate on shore. Now you may say, okay, they were committing fraud, this, that, and the other thing, but the bottom line is that if I think if you had this, My guess is they would have operated on shore. They wouldn't have done the stupid things they were doing. And all of that mess and brouhaha from Celsius, BlockFi, Voyager, FTX, whatever, could have been avoided.
I want to take a minute, guys, and just invite you to join the Barron Market Edge private member group. You guys can do that by just clicking the link down in our description. This is your insider's edge to the AI and crypto money revolution, which is what we really focus on here on PBN. This is additional research that I do along with our team. We have a pretty significant team on our research around not only what guides our episodes, but a lot of that research gets built into more content that I drop here on the Barron Market Edge. We do market trends and sentiment analysis, which can be anything from tokens to all sorts of strategies. This, of course, will also guide you over to our Telegram group, and we give this as elite community access. You get bonus content over there, including tax guides, as well as different kinds of asset guides out there that we drop all the time. This is your 10-year vision in action. All you have to do, of course, is just hit that little subscribe button or join the community and get in on it. It's absolutely free. It doesn't cost you a thing. So check it out. Well, that's an interesting point is that, I guess the limitation of our own government not really opening up for one of the most innovative categories and sectors out there early enough has really kind of put us behind the eight ball in terms of innovation. But at the same time, you would also argue, well, this is the biggest financial market in the world.
Hmm.
We catch up pretty quickly. Do you think the US's position, again, with clarity getting through, if it does, do you think the US position can truly be a pole position in crypto, or do you think we risk losing this to Asia?
I actually think this strength, we leapfrog a lot of what others have done via Genius and Clarity Act. And
Yeah.
that is astounding to me. I mean, it was dire 4 years ago.
Yeah, for
I
sure.
mean, literally dire. This is not hyperbole. And so for us to be in a position to leapfrog the industry from a regulatory perspective is not something that I had on my bingo card 4 years ago. I'll tell you that,
Yeah.
because I was just like, how is the US crypto industry going to survive given this mostly illegal onslaught of never ending, you know, regulation by enforcement? And this genuinely undoes that and creates a viable framework. And so, a couple of examples, right? What does it mean to be decentralized? It defines network tokens clearly, right?
Mhm.
Which the last, under the last administration, everything was a security.
Sure.
And so having that clarity right there, and again, they do provide text for explicit tests for decentralization in general, and I have no problem with that. If something doesn't have an off switch in general, and I'm giving you my interpretation, it's sufficiently decentralized by definition because you can't turn it off. So
Yeah.
so if there's no one you can sue because it's already out there, it's already on and you can't turn it
Exactly.
off,
Yeah.
it should be deemed decentralized. And from what I can gather, based upon, again, the intelligent people that have been working on this, they're trying to build a legal framework that provides legalese for what I just said in a non legalese way. And that's great. That's, again, I keep saying the same thing in different ways, but that's what we've been asking for all along.
Senator Warren came in with 40 amendments, to your point. Not surprising. We thought it might
No.
be more. But one is preventing the Federal Reserve from issuing master accounts to crypto companies. Do you think, because again, that's, securing the shore of what her constituents and donors are really about. You think that has any potential of making it through into
No,
the
no,
bill?
I think that's absurd. And I think it's probably illegal. I mean, what is a crypto company, right?
Yeah.
Like you started the conversation by asking how we pivoted from a legal perspective in terms of
Mhm.
how we operate. But if I go get an OCC charter explicitly to operate as a tokenized bank, I'm going to have a Fed master account, and that's just the way the Fed operates.
Technically,
And
JP Morgan would be a crypto company right now.
absolutely, that's my point. And so that
Yeah.
the whole discussion becomes absurd under this model.
Yeah. How does she, I guess, in the position, and I understand, where you think it's going, but And we don't know that it is truly an evil mission of trying to do this to the American financial system, but why do you think we're seeing such deviation between the Republicans and the Democrats right now? It appears that the Republicans seem to be very pro crypto, most of which we've got to get a handful of senators through, some very key ones on the Democratic side. Don't wouldn't you think that the Democrats would take this as an opportunity and use this to leverage into midterms?
Yeah, there's a couple of things going on, right? So the reality is there are Democrats that support this,
Mhm.
and the the biggest problem with the Democrats that support this is Trump, and so there's just this divide now. It was a similar thing, like, if you go back to 15 years when Obama was in office, there was a similar kind of, I don't know if ideological, I'm not a politician, what the right word is, but that divide was basically, block, block, block. And we have a similar thing going on right now, block, block, block. And I'll say straight up, as somebody who voted for this administration, launching meme coins, owning businesses in the space probably wasn't the best way to start, within the administration. It didn't provide a
Mhm.
good look, right? And so yes, I wish they hadn't done that. But the reality is the good that they've done so far outweighs everything that I might say I wish they hadn't done. It's just
Yeah.
it's to me it's like dwarfs everything else. And so listening to them just say block 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 when I know via one-on-one conversations from people who are in the know with certain Democrats that they fully support this because they know
Mhm.
it's the future. they
Mhm.
they actually like the technology. Some of them are invested in the technology themselves, and so that's the power of the Elizabeth Warrens of the party, who are hell bent, like I said, on socializing the system during the next
Yeah.
potential crisis.
One of the big topics we get into here on this show is really getting debasement, getting away from dollar exposure. You
Yep.
look at some of the things that are happening right now, just looking at Forex data. I'll bring that up on screen for everybody so you can kind of see what I'm referencing. But this is a good example. This is the share of global foreign currency reserves, which have fallen to its lowest level this century. So to me, when you look at the movement into crypto digital assets,
Yep.
tokenized treasuries, et cetera, eh, Bill, how long do you think we will be before the dollar is no longer the global reserve? Do you think that's in our lifetime?
Yeah, I mean, the transition is happening now. That's why we saw the run up in gold, right? So let me break it down from a macro perspective, right? So Fed tried to lower interest rates, I think, 3 times in the current cycle. Each time, now when they do that, normally what's supposed to happen is mid and long term rates are supposed to start to trickle down.
Right.
That didn't happen. All 3 times they spiked. Why? Why is this happening? Well, this chart is very telling, right? So our debt is simply unsustainable. When you basically create more and more and more of something, right, you reduce scarcity. And
Mhm.
unfortunately, in this case, the scarcity of our debt is just going away. Are producing an infinite amount of it. And we've reached a point where the debt servicing is costing us $1 trillion a year. It's more than the defense budget, right? So maybe not before Iran, but certainly before Iran, it was more than the defense budget.
Yeah.
That is untenable if your goal is to be the global reserve currency, because no one is going to support you, because eventually
Right.
demand for your debt is going to not be sufficient versus the supply of debt you're creating. So the only way to deal with that, well, there's two ways to deal with that. The first is not good. That's usually war, and that's what Dalio writes about when he talks about changing world orders and rise and fall of empires. He says, look at bond markets, and he's right. But the second thing is interest rates have to skyrocket, right? Because if the demand just isn't there, you're going to have to keep paying more and more and more to create the demand.
Yeah.
And that just basically creates a vicious cycle, because the interest payments have to come from somewhere.
Mhm.
And it either comes from taxes or printing money. And if you print money, the debasement just accelerates.
Yeah.
And I think we're in that mode now where taxes are untenable, right? The only thing that potentially staves off a hyperinflation cycle from a late stage empire like this is massive increase in productivity, right? So if Elon is right and we have a trillion robots doing a trillion new things, yes, we could get to the point in 5 years where we have huge, massive gains in productivity, which could increase GDP, which could negate the effect of the debasement cycle.
Hmm.
But we're not even close to that right now, right? And so if you're living in the here and now, we have a
I want
problem.
to take a minute, guys, and just
And
invite you
so,
to join the
this
Barron Market
administration is
Edge
highly
private member
incentivized
group. You guys can do
for,
that by just
marketing
clicking the link down in
treasuries
our description. This is your
and,
insider's
getting the
edge
oil
to
trade
the AI and
back
crypto money
to be
revolution,
treasury
which is
based.
what we're really focused
Well,
on here on
what were the
PBN.
last two
This is
actions that this
additional
administration
research
took?
that I
Well, the
do
first
along
was
with our
Venezuela,
team. And we have a pretty
biggest
significant
oil
team on
reserves in
our
the region
research
and in
around
that
not only
region.
what
And the second
guides our
was
episodes,
Iran,
but
which
a lot
obviously,
of that research gets built
is the
into
king, the
more
oil king
content that
in
I
that
drop
region. And
here
so
on the Barron
this
Market Edge.
administration
We do market trends and
understands the
sentiment
problem. The
analysis,
question
which
is,
can
what
be
tools do they
anything
have
from
on the shelf that
tokens
they can
to
bring to
all sorts of
bear to
strategies.
solve the
This, of
problem?
course, will
Because they
also
can't just
guide
wave a
you
wand
over
and
to
have
our
the debt go
Telegram
away.
group,
If
and
they
we
could,
give
then
this
interest
as
rates would
elite
come down,
community
obviously.
access.
Yeah.
You get
Yeah.
bonus
Do you
content over there,
do you
including
think that
tax
this
guides, as
situation
well
right
as
now in
different
farmers,
kinds
I mean,
of
what are they calling
asset
it? The
guides
nacho
out there
like
that we
drop
drop all
or
the
not
time.
not a chance
This
that
is
farmers
your
opens
10-year vision in
continues
action.
to
All you have to do,
kind of
of
put
course, is just
pressure
hit that
on,
little
well, it's going to put a lot of
subscribe button
pressure
or
on
join the
globally. I mean, you
community
got pressure on
and
China, you
get
got
in on
pressure
it.
on
It's
the EU
absolutely
in
free. It
terms
doesn't
of
cost
just
you a
energy
thing. So
supply.
check
Get out.
opens up lanes here in the US to drive more petroleum products out of the US and become somewhat of a net supplier to the world. Do you think this is part of the potential to try to stabilize where the dollar is heading?
Yeah, I mean, look, like I said, it's the problem is demand, and you showed it on your chart.
Yeah.
Demand for dollar reserves is waning. It's a function. It's all related, right? Now, the demand for treasuries was stabilizing before Iran. My guess
Right.
is that it's probably decreased since then.
Yep.
But China is clearly a net seller. Japan was a net seller. The U.S. convinced them to basically stabilize. And remember when the carry trade was starting to unwind last summer, the
Mhm.
effect that that had. Europe is clearly not interested in buying oodles of American debt at this point. And so the problem is the same, right? Is the only real guarantee, well, there's two guaranteed buyers of our debt right now. The first is Tether,
Mhm. Yep.
which seems to have an infinite appetite for U.S. Treasuries because of the adoption of stablecoins slash
Sure.
Tether slash Circle. And the second is ourselves, which is not a good look when you start buying your own debt, because the only way to do that is to print more money. And that's what we're doing, right? So this is just going to be another inflation trade, and I
Yeah.
think you're going to basically see the norm get back to 4 to 5% this year, unless something dramatic happens in Iran and oil prices plummets, which is possible. I hope that happens, but right now I don't have any visibility to that happening. Right, we're going to see 4 to 5% sustained inflation, maybe with spikes up or down.
Yeah, for sure. Well, and this starts to rotate into the midterms. This is something that I thought was interesting. I want to get your opinion on this. Andreessen Horowitz, and I'll bring this up on screen so you can see it. Andreessen Horowitz now plowing in a ton of money into the midterms. Another 115 firm now spending 115 million on politics in this cycle, not ever seen by a VC firm
Yep.
before. So this tells me something that what are they concerned about going into the midterms? Is
Yep.
there anything that you think is going to pivot here? What's happening?
They're concerned about AI mostly. Now, if you're in the know in VC land, you know that the powers that be in Silicon Valley were called to the White House under Biden, and
Yep.
we're in no uncertain terms told to pack it up as it relates to AI, right?
Mhm.
We're going to own it, we're going to regulate it. There's not going to be a free market, and it's just not going to happen. That's what they were told, right?
Yeah.
And that was the biggest wake up call in history for Silicon Valley from a political perspective, right?
Mhm.
And it galvanized Silicon Valley into the arms of this administration. And a lot of my friends who are not even armchair politicians
Exactly.
or interested in politics now all of a sudden are paying big time attention or even involved in this administration. And I actually think that's a good thing, because I think getting people from a citizen activism perspective involved, regardless of whether you were doing that under Obama. Because I have a lot of friends who did that under the Obama administration, people who became politically involved for the first time, took jobs in the State Department. It was a little bit different. It wasn't so much technology as it is now. But I
Yeah.
applaud that, right? And I don't think that I don't believe in the idea of a career politician, by the way. So as a libertarian, but that's a different issue, right? So I think that to get to your point, your question, this is about AI, right? The progress that we've made and the potential to lose that progress is a potential existential crisis for the United States in this new type of Cold War that's going on between the US and China, right? And so that is, from, and I haven't talked to them about this, but I can easily see, how them discussing this in the format of this is a fight to the death.
Yeah.
And so when you say they're spending 100 million, when you look at it from that perspective, and they're literally investing tens of billions of dollars, it's
Probably
actually a
nothing.
pretty small insurance policy if you think you're going to
Yeah.
win. Yeah.
Well, and I think the point being is that at some point, don't you think that the new age of lawmakers are going to realize the two critical components of future innovation, AI, crypto, tokenization,
Yeah.
and truly adopt it bipartisan? Wouldn't you assume this is going to happen?
Well, okay. So once it happens and it's fake complete because everybody just makes it their own idea. That's how
Mhm.
politics works, right? Like,
Yeah.
I invented the internet, like kind of thing with Al Gore, right? So,
Out for it.
so,
Yep.
so that will happen. By the way, I think those things all merge into part of the same thing, right? AI, tokenization, crypto rails, smart contracts. They all
Sure.
basically become part of a new financial order because AI agents that have already taken over part of my life are actually going to be based on crypto rails anyway. But
Mhm.
but I think what's going to happen is, and politicians are exceedingly good at this, is making things their own idea when it's self-serving, and that's even I'm referring to people I've supported publicly as well, and that's fine as long as the public gets what it wants and what it should have, which is you know first of all erring on the side of freedom and getting out of the way, and only
Yep.
getting in the way when it really absolutely needs to, which is very rarely, in my opinion.
Yeah, for sure. Exactly. Try to get away from avoiding conflict, I think, with the American people when it comes to just innovation, building businesses, examples that we're dealing with right now. A Clarity Act passes. You have to pick three winners. Who do you think they would be? And this industry wise, or it could be Americans, it could
Yeah.
be, who do you think the three would be?
I think the wealth industry is going to be pushed to migrate to tokenization as a result of this. And so you're going to see a crop of AI based robo advisors that offer, tokenized and automated portfolio creation capabilities.
Yep.
That's something that, I think is a big part of Abra's future. Ultimately, as a fiduciary for our clients, we're always looking for ways to help them navigate their own requirements, risk profiles, et cetera, et cetera. So I think that, it's a little self-serving. I apologize, but I think we're very well positioned as a result of what we're reading. And honestly, that was mostly a function of us surmising where we think this had to go based upon everything that had happened and what we were hearing from the administration. And so that's number one. I think the banks are actually winners here. And so, you know, and I also think that the startup world, DeFi, is actually the third big winner here. The
Yep.
ability for decentralized systems to, be created from nothing, to have their big bang moments and potentially go from raising money in what would be a security offering to becoming fully decentralized. That's
Yeah.
the path from
It's
startup
huge.
to decentralization that we always said needed to be clarified. And
Yep.
that's, I'm talking myself into it, but that's probably the most important thing long term here is not
Mhm.
even Abra or the banks. It's the ability for decentralized systems to basically be combusted into existence and go from raising money via security sale to being sufficiently decentralized.
Well, we've seen, and the model has been in place for DeFi. We've seen so many different
Yeah.
winners and a lot of the ecosystems out there. I would call Solana being one of the big ones that has really created a lot of kings.
Yeah.
And the likelihood is we'll see maybe 10x, 50x, 100x of that in the coming years. How
Right.
long do you think, you and I both probably were around in the era when I was a young engineer at Microsoft in 1996 through 7, just getting into Microsoft, the birth of the internet, and then the obviously the dot bomb. But the creation period after that was significant, and it happened fairly quickly. What do you think that looks like in terms of the bell curve for crypto?
I was at Netscape when you were at Microsoft, and
Oh, okay. We were
when
we were mortal enemies.
yeah, exactly. I think I testified at one point in against you guys. So, look, historically, when you have these kind of bubbles and crashes,
Yeah,
those become the best times for entrepreneurs to build, even if they don't know it at the time, even if it's
yeah.
scary and painful. And, especially back then, because, being well educated and having a degree in computer science was like a lottery ticket, like that you knew was going to win.
Mhm,
That's not necessarily the case today, except if you're willing to basically take the proverbial risk to be an AI entrepreneur.
mhm.
You can kind of trip over something useful, interesting that people will pay for. But that's historically the best time to be an entrepreneur in my mind, and this is by far the best time
This
in
is it.
history that I've
Yeah, this
ever
is it.
seen for a 20 something out of school to start a company. Oh, the big challenge in the 90s, the dot-com era, the mobile app era was always about, do you know how to build a sustainable company?
Yeah.
That's not a problem right now.
Yeah.
That's not the key challenge here, because you're going to see one and two person billion-dollar companies come out of this AI era, and they're going to hire. We work with Goodwin, or some accounting firm here, County in Silicon Valley, that's going to basically act as your finance team, your legal team, and it's all going to be outsourced, and you're going to have your 3-person startup, and AI is going to enable that. I have agents for everything, and I'm an older guy, right? So the kids aren't going to know anything different. This is an awesome time.
I think it is too. That's what I tell, we get a chance to do these wealth seminars, and this is the one thing. Most of them are business owners that are coming in and he's trying to explore, how crypto and blockchain are going to be usable in their own businesses. And I'm like, I'm just so excited for them because I'm like, you own a business in a time in which innovation is exploding. So
Totally agree.
welcome to the fun. Hey, Bill, it's been good having you on today. Thanks for the roundup here. We're going to be watching Abra very closely, so we appreciate you stopping in.
So good to see you. Thanks for having me.